Did you listen to me yesterday? Liquidity, we might revisit 55k, but after that I do think that we should be going straight up to 61k at least. It's too easy to predict short-term market movements at this stage, and to be honest, this is what freaks me out currently, because there are reasons. It's actually too easy to do that at this stage. You just look at liquidation map. They're just taking liquidity into the range lows. Today, I will specifically explain what does this mean for the market. And I will also share some factual data and opinions on the current situation with altcoins versus meme coins, utility stuff versus stuff that does not have utility. What I do think will be happening moving further into the cycle, and where you should actually be positioning your portfolio at this stage in order to be able to achieve high levels of liquidity initially into the start of the run, so you will have a larger field for the manipulation through the run as well. Like this video, subscribe to this channel if you don't want to miss this type of content moving further, and let's start. Kicking off with our Bitcoin situation at this stage, and to be honest, it just becomes too easy to predict short-term price movements for this market. And this is something that freaks me out, as I mentioned already, because yesterday I just shared that we had a bunch of liquidity around $56,000 level per BTC. And this is exactly what we scooped day after. You might think that, oh, we probably had the news that Kamala did pretty nicely on the presidential debates, and that's why her rating went a bit up, and that's why we had this dump. This is just a piece of bull crap. You need to understand that these news, they're just presenting to you to explain the price movements, but they are making price movements first. We just had a bunch of liquidity there. That's why we essentially dumped to this level. And what we are seeing currently is very, very interesting, is that yesterday we did not have this wall of liquidity, of shorts liquidity at $58,000. Right now we already have it. At the same time, we do have quite a lot of loans open from 55.5k levels. We'll see what will be happening moving further. My prediction at this stage is that we should go through this level of liquidity at 58k. These shorts should get liquidated, and this would essentially push us to 61k. And right after, we would be assessing, based on this situation right there, what will be happening moving further with the market as well. A range of people out there are planning for the 20% drop per BTC that will probably send some alts and a range of meme coins 50% lower from the current levels. I do have some cash on this side personally. I'm not planning for this scenario fully. I would rather just be investing and putting money at these levels, because I don't want to be greedy in the fearful market setup that we are currently in 100%. But the time will essentially tell. I will still leave some cash on the side for the situation if we will be revisiting high 40s. At this stage, I don't think we should be seeing that, because market is quite interesting currently. It's almost like we have like 80% of the market, we can divide them 50-50. Half of them are bullish, and just bullish straight away, we're going higher, because honestly speaking, we've been in 6 months range at this stage. It's quite a lot, right? Second half, they are bullish as well, but they are awaiting the dump. They're waiting to dip like 20% dip on BTC in upcoming 2 to 3 weeks. Timing wise, it's also quite nicely, because usually September is definitely not that bullish, but closer to the September, me personally and the range of people on this market, they expect the kick off of the movement in the market as well. And we have a range of bullish events, and first rate cut should actually be happening in exactly a week from now. And the last 20% of the market, they pretty much just think that we are going down from here, and we would restart like going higher, maybe closer to the mid of the rate cut cycle somewhere in February, right? And right now we'll just be going down, down, and down. Well, this part of the year is usually very, very good for business, different type of businesses. E-commerce is just like, it's just pumping, but nevertheless, like a range of businesses, they do actually tend to make a lot of cash during this time of year, and that's essentially like the result of that is quite a dead field in terms of business activities into the months of January, like December and start of January, when people are waking up from like US holidays and things like that, right? But generally speaking, usually during this time, autumn is very nice for essentially our portfolios to go up and for the market to go up as well. The thing that I wanted to tell is what makes me cautious about the current situation is that they are still people who are manipulating this market, market makers. The only thing that they're still doing is that they're just taking liquidity through deviations at the bottom and tops of the range. This is something that's happening through all this chop, and it just keeps continuing to happen. When we have too much loans opened, they pretty much create a huge dump, right? So you have to understand that if they're doing something like this, it means that they're not pouring in a lot of liquidity from themselves. They're just using what is available on the market, and they're just using just small chunks of the funds or the liquidity they have access to in order to take the liquidity from people who would want to use leverage at this stage, use perps, right? And this, what kind of fears me? Because what it shows me is that there is a lot of uncertainty on that end. It shows that they're not sure themselves what will be happening further. And they're just in this passive situation, they're quite nice. Maybe they're accumulating some assets. Maybe they are finalizing the time capitulation at this stage, because time capitulation is the largest capitulation where people are essentially selling just due to the fact that nothing has happened with the assets, right? Maybe they are finalizing the time capitulation at this stage, but they're definitely not making moves at this stage. They're waiting for the catalyst, and they're waiting for the final shakeout to happen with more and more people essentially leaving. Final shakeout, like 20% drawdown, it definitely sounds interesting from this point of view. But the situation here, as I think, is that the more people would actually expect it, the more people will believe in cash, the more people won't be acting here, the lower the chance that this last 20% drawdown will actually be happening. The more people at the same time will be bullish currently, the more loans will we have, the higher the chance that this drawdown will be happen. Because as mentioned, market makers and manipulators, they are not pouring in their own funds like in large sums at this stage in order to manipulate the price of the market. They're just waiting for the catalyst, for the narrative. It's very, very similar to like some type of meme coin pumping. They don't want to just buy from the charts with themselves. They want like some positive type of narrative going on in the world, in the markets, right? To be able to start to pour in the cash where the effectiveness of the dollars that they pour into the chart is way higher than currently. Currently, people will probably just dump on them. And this is something that's happening because maybe they're trying to test out like the pumps and they see that people are selling. People were taught to sell and short each and every pump. This is a very, very dangerous lesson if you adopt it closer to the end of the sideways price action. This is something that you need to understand heavily. Situation that I wanted to discuss. What we do have with alts and what we do have with memes currently. Thus far in this cycle, alts heavily underperform meme coins. We saw just a range of certain alts pumping up in certain narratives. I would say that mostly like core projects in the narratives and some beta plays as well. We have Render and we had essentially a range of AI projects following the pump of Render as well. We have Ondo in real world assets and essentially a range of area assets pumped after them as well. But the situation unfortunately is that projects are coming into the market at $3 billion market cap, $2 billion market cap, and they're just dumping, they're just moving down from there. It's not like it was in the previous cycles. In previous cycles, they were appearing on the marketplace at $100 million market cap. Retail was actually able to buy and ride the whole thing and tell everyone else. This is because each and every holder on each and every coin is actually the affiliate marketer for the coin. We all have to understand this. And I'm doing way better jobs. If you're holding the same coins as me, I'm doing way better job as affiliate marketer for our coin than you are doing. You have to understand this as well. Each and every holder is an affiliate marketer for the coin. And what was happening in the previous cycle, when people were buying $100 million market cap, they were able to make money. They were able to see 10, 20, 30 access, and they became these diehards, affiliate marketers, diamond hands, holders for the projects, because these were the projects that actually made them money. Currently, we do not see the situation like this in alts. We only see the situation like this in memes. Only in memes currently retail can actually come like with $500 and have like 5k from it, have 10k from it, have 15k from it, and become a diamond hand holder, become this true proponent of the project, right? However, at the same time, what is happening is that people who are still actively trading memes, first of all, they became very, very good. They know very, very well how to rob random tourists at this stage. And I do think that this is something that's happened in March. In March, a bunch of people came, they were professionally robbed out of the money, right? And that's why kind of retail wave, we did not have this larger bull run. It pretty much just lasted for 1.5 months, like March and the part of April, right? And the reason for that is because people were professionally robbed from more experienced people and at this market. And in order for the bull market to continue, you have to have people who would be willing to hold. In order for people to be willing to hold, you need to have good enough narrative on the market so they would understand that it actually makes sense holding. Like for example, 12 months of consecutive rate cuts. This is a very, very nice narrative for actually a longer term hold of the assets, right? Maybe the assets will start to pump heavily in the middle of this kind of like rate cuts cycle, right? But we would essentially see, because maybe the market won't want to front run this too much, or it would get manipulated into not front running it, so they will extend the time capitulation, so more and more people will sell. They will be able to bottom out, scoop up the assets that these people are selling due to the time capitulation, because time is definitely on the side of the whales, on the side of the market manipulators, on the side of the market makers as well. They definitely don't have to pay the bills next month with the money that they invested into the market. The issue that we see in the memes currently is definitely lack of trust. Lack of trust leads to the fact that no one wants to hold. It leads to the fact that memes, they essentially do not go up heavily. You can see something like Kate on Ethereum, for example. Like, it was recently shielded by a bunch of influencers at $7 million market cap, and today it's $17 million market cap. But liquidity on this thing is $335,000. This is just crazy. Back in high liquidity days, this amount of liquidity will put the token like this to 600k market cap. It's at 17 million. It's like a pure realization of the fact that people don't have money currently. They don't want to play the meme casino at this stage. We don't have a lot of new people, and unfortunately, money is getting extracted out of the market at this stage. Projects, they're like dumping, they're correcting, and things like that. This is just like this final show off of what is the situation in the marketplace currently. If we start like seeing projects with $20 million in market cap and $100k of liquidity, it would be just crazy. Because the issue with them is they have to control supply to be able to sustain that. Because even like top 10 holder, he can dump half of the liquidity pool. Half of the liquidity pool, that's just one top 10 holder. And you can see that the whole thing is bundled based on the fact that kind of the percentages are quite near to each other. And yeah, with this type of launches, I'm 100% sure that it's bundled as well. So the issue is that people that actually hold, that have high level of trust, right, they need to start outperforming people that actually trade, right? This would be the time where the market and where the assets would finally start to appreciate. And don't get me wrong, people that want to rob other people, that want to trade, they might just continue doing that. It's just that we will have such a huge tsunami of liquidity coming to the market that that strategy won't yield enough results. And what they would essentially start to do, they will stop abusing the current strategy of trading, of essentially just inviting people to dump on them. They will understand that if they hold, they will yield more, they will have a higher ROI, and that essentially will transform into them changing how they behave on the marketplace. And they will become these first holders because they will just understand that through holding, they're actually yielding higher result on the marketplace. This might be happening essentially with the overall pump of the market, and it will probably require the bullish narrative to come in. Maybe the election finally, maybe the stock market surging to new all-time highs, most likely rate cuts. Rate cuts might take time over time, but as mentioned, markets are front running. I would say that stock market, one of the reasons the stock market is essentially running is because people there, they don't understand that rate cuts like are bullish, and probably it's a bit less manipulated, right? Because I do think crypto-wise, I do still think that the whole summer situation, I was saying that we should be seeing new all-time high in May. I do think that the whole situation there is heavily manipulated. They just saw too many people bullish, too many people staying in longs, and for some reason they just decided not to. They decided to take the profits. Maybe it's also partially a PTSD from the bear market, of the manipulators, of people with a bunch of money that decided, let us not actually feed this fish moving further, moving higher. Let us actually make money currently and dump on this fish currently, because we don't want to grow it bigger. And the reason they didn't want to grow it bigger is out of fear. They were fearing that if they will essentially allow for the fish to grow bigger, allow for the market to go higher, then more and more people will essentially take profits. And probably they had like certain reasons for that, because obviously they do have AI tools, they have the sentiment checkers, they have leverage checkers on their end, funding rates and things like that. So probably they just saw, following the situation right there, that if we would move higher, too many people would reach their own targets for taking profits, right? And they will start taking profits, even through the greed that we had at that stage. And this is something that manipulators do not want to make in the first place, because if people, instead of them, start to take profits, that means that all the money they spent to buy out assets at the bottoms and push these assets, all this money will be taken from random people, or from the market, from tourists, right? Even from experienced market participants. This money will be taken from them, right? And they need to take this money as profits in order partially to be able to push the assets moving further. One more time, if you lose money on this market, and if it's not like just some extractor, if it's like at least like a market maker, right? You can think that you're giving him money away in order to push your assets moving further into the future. So the situation that we have with memes is that we do have a lack of trust at this stage. We do have the stats that most people just lost money in meme coins. Most people, unfortunately, lost money in meme coins. And alts, the situation is that they're coming out with huge valuations. We have a bunch of TGEs, token generation events, that should be happening with a bunch of alts actually coming out into the market when the market conditions will actually become better, which will even make the dilution situation worse. We will not only have like a bunch of memes, we'll also have a bunch of launches of good altcoins with utility, things like that. So it's really about like really strong fundamental projects in each and every narrative sector. And it's not even like strong fundamentally, but strong from market making point of view as well. They need to understand how to work with the chart. They need to understand like what are they doing in the chart. They need to have printed a very nice chart thus far. So people who are reading the chart and who pretty much know how to print the chart themselves, they would look at this chart and they would see like, these guys are doing something interesting. I like the way they're printing the chart. That's why I'm actually making the conclusion that they are understanding what are they doing. They do know they have targets. They're printing it in a certain way to attract certain people as well. And they will get into the project because they would see clear certain levels, they will see clear levels for take profits, and they would essentially see that these people take focus on the market making and on the marketing of the project as well. So we're at a very weird spot, I would say. I do think that unfortunately for a lot of people, this cycle would be the one where they would just get left sidelined, where they would be through the whole cycle, they would be essentially in some alts, in some memes, but they will heavily underperform just because of the fact that they were not sitting in the right projects. And I would say that this is something that happened already. I know stories of people that were throwing hundreds of thousands of dollars into meme coins in the summer and the late spring, just because of the fact that they lost the bulk of the movement right here, like right here, this one, right? They didn't believe in meme coins, and then they started to put money somewhere here. And essentially they lost most of it because a lot of things they were rugging, right? And this was the situation, unfortunately. And this is something that might be happening moving further. And with these ruggers, like, they do not reinvest these funds into the market. They just take them for themselves. This is like a huge issue that we have specifically with meme coin space, essentially with alts as well. Because if a guy just rug the alt, just takes money for himself, well, it's just a higher chance with alts not to be scammed, because you have to show some fundamentals, you have to show some team, so you definitely have more responsibility, and there is a higher chance for you to be doxed in the space as well. So this is pretty much it. This is my overview on the current situation. I do think that key skill currently is to accumulate the alts that essentially would be pumping through this cycle. I'll probably be doing a separate video on criteria that I think you should be focusing on when thinking about buying into the alts, buying into meme coins at this stage. I would provide you with a list of criteria on how to actually pick these type of assets that have a higher chance of pumping. The main thing is higher chance of outperforming the market, because eventually I think everything will pump. It's just that some things will heavily underperform in comparison to the others. And the key is to be able to pick the things that will outperform. My portfolio before the start of this run, I had like 1 or 2 things heavily outperform. Most of the stuff maybe did like 2 to 3 to 4x. Some of the stuff just stayed at the same levels, mostly tokens of the previous cycle. Currently, this is the time to work on your portfolio, to pick the assets that you think will be pumping, that have a higher chance essentially to pump once the market reverses. Not based only on your own feelings, but based on data, based on charts, based on fundamentals, based on different criteria that this asset will have, and I will actually provide this to you tomorrow. Like this video, subscribe to this channel if you don't want to miss this as well. Thank you very much for watching this video. I'll be seeing you tomorrow. Bye bye.